So welcome to the next episode of skill building. I'm getting my timer ready, but this video will be one of the shortest, one of the easiest, because here in this video I will just explain how to find it and how to use it. And in the last video of skill building, the SMC video you find down below, there will be the connection for all the different building blocks and confluences we explained you in the last 10 episodes and why it's happening. Because for now it's just confluences, and I tell you, okay, another block is here, and you're like, okay, order block is here, but you don't really understand what an order block really is in depth and why it's there. So for the big why and how it works, there will be the last video. But for now, we just focus on what is it, how to identify, and how to use it. So let's start with what is it. An order block is just a place where orders are lying. That's all for this video. The more deep explanation you will get in the last video. So a order block is where orders are lying. So now just get into it. We know a trend. We know when we have a shift of structure, we identify the recent lower high. And we get a break of it, so we have a shift of structure. Because we're monitoring this high, and we know, okay, the candle closed above, and we have a shift of structure. So now that's it. From this low here, from the lowest point, so from the, let's do it in the other direction, from the highest where the trend go to the change. This is the start of the order block right here. This is the start of the order block. And the order block, now we are monitoring a new uptrend, and the new uptrend needs, new uptrend. So new high, new lows, new highs, and so on. So this part is the order block. The order block is from the recent high, what we broke, to the lowest. And this part is our order block. And that's already it. So let's do it for the other direction. We have a trend up. So what we are monitoring? The recent low. Make a line, it's easier. So now we change and we break. Make a line to make it easier. This is the order block. All of this. Okay, again in the other direction. And you tell me. So what we are monitoring? Right, the high. So line. Now we get a break. What we're monitoring? The low. So this, all of this, there's orders lying. Why? You get explained in the last video, but this is the order block. This. So that's it. That's about order blocks. This is an order block, and this is an order block. So now let's check on the chart where we can find an order block. Let me search for a really good example, for a really clean one, so you understand. Let me search for one. As long as I'm searching, you can identify liquidity sweeps, and highs and lows like you learned in the last videos. So let me go a little bit down the time frame. You're looking for liquidity sweeps? You found one? You found fair value gaps? You found fair value gaps? Maybe. Okay, so here's a good example. Let's go back. Let's go back. Okay, so we have a big downtrend. Yeah, you can see here we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. Okay, whatever. Now, what are we monitoring? We're monitoring the recent lower high, which is here. This is the recent lower high. So in our drawing, We know this is the first important line. Now we wait for the break of it. Okay, no break. Okay, maybe this is not a break. We go above, but we do not break the line. We do not close above. So we have to wait for the next candle. Okay, now we break. So, this here, our another line. So all of this is the order block. From here to here, that's our order block. Here are orders lying. And now we can often see that we can come back into this order block, touch it, and then get a reaction out of it. So that's what we're monitoring. But this is an order block, and that's all it is. It's not complicated. So now let's go into a breaker block. We take this example, and I make a drawing first. So a breaker block is, yeah, a little bit more complicated, but not too hard. We have the downtrend. We are monitoring the high. Okay, now we get a break of it. Okay, let's see here how this looks. We have the high here, and we have a break of it. Okay, so now the breaker block is the wick from the biggest, like, how to explain in an easy way. It's hard for me to explain an easy way because it's obvious for me. It catches the eye. So if we have an up candle and a down candle for the high, and the up candle has the highest point, then we are looking to take the wick from the up candle. If the down candle has the biggest wick, we are going to look for the wick for the down candle. But the breaker block is from the body to the from the candle to the wick. This is the breaker block. So let's identify 2 or 3 more breaker blocks because it's a little bit confusing and different in the beginning. So let's see here, this one. We have a downtrend. High, lower low, lower high. Okay, so we're monitoring the high. Okay, and we get a break of it. So this would be the order block. All of this from here to the low. Easy. Where's the breaker block? We have a high, and the highest candle is an up candle. So we take the wick of it, and that's, sorry for the magnet, but that's the breaker block. And that's pretty much all it is. Okay, I think breaker block should be clear. It's maybe a little bit difficult. If you have questions, just try to mark order blocks and breaker blocks and send them in the general chat and ask. Yeah, and ask other people, ask us if it's correct or not. But normally when you see it like this, when you visualize like this, then you understand. You can see that it's the wicks is from the body to the top of those candles who form the high or who form the low in the other direction. So now let's go over equilibrium. Equilibrium is just, yeah, translated as just balancing out of the chart. We know when the chart moves up, it doesn't move like this. A chart always moves like this because there's buyers and sellers. So here you already know there might be fair value gaps which we are filling. And we do know that often the chart comes back to fill exactly half of it. Exactly half. Half means equilibrium. We fill the half of it. So we measure from down here to down here because that's the wall move. And we measure half of it. And half of it is around here. And we often touch half of it and then go up again. Or in the other direction, we have a downtrend. And here, for example, we have this extension and we often visit half of it to then go lower again. So let's not draw something, but go on the chart and see. We take this example here. We get a liquidity sweep. You already know this. We get a lower time frame liquidity sweep from this low. We sweep it and then we go up. We break current downtrend to the upside with this candle. We form an order block right here. we form a breaker block right here, and we have this extension to the upside. So now we can take our tool and measure from down here to the uppest point of this extension, yeah, and see, okay, equilibrium is right here. And what we do, we build the order block, we break the breaker block, and we have equilibrium. We break structure to the upside, we come down, we revisit the order block, we revisit the breaker block, we also touch equilibrium, and we get a bullish reaction with this candle out of it. So I think with this you understand what order block is. You can identify it, you can identify a breaker block and equilibrium. And now just watch the other videos, and in the last video everything comes together and you understand the meaning and the deep why of it.